Okay, traders, good morning. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Wednesday, February 27th. Great to be with you guys in the room. Kamal, Mark, Marco, Ty, Ziad, Jayad, good morning to you as well, sir. Great to be with you guys. So the dollar resumption to the downside is continuing, but I caution, the chase here, as I did last night. Some interesting areas to look at as the DXY comes into this pivotal area. Again, this is the weekly chart. We'll talk about this in a moment. On the menu for today, I got down the DXY. I wanted to hit Euro right off the bat right after that because we are, again, coming from some pretty near-term levels where the thing could just continue to break down. So we'll hit both of those early in the session. Last night's update on Kiwi, Sterling, Dollar, CAD, and Gold. And then we'll circle back and hit that crude update as well as the SPX with those levels that we've been following. Questions, comments, trade setups from you guys, as always, welcome. Feel free to throw them on the message board at any time. Hey, Aurelian, great to see you in the room, man. Okay, so let's just jump right in. So here's the DXY look like on the 24th. And this is sort of the main focus from right now. Here's the intraday chart, but real quick, here's the weekly. You all know this chart real well. The yearly open or the low week close for this drop here as we opened up the year was 95.66. That's just below the long-running 200-week moving average, okay, right here in blue. And basically, we're looking for a reaction right here. Okay, this has still been like the thorn in our side ever since the breach here in October. Every attempt to break below this level intra-week, it looked fantastic, but we closed above every time. Again, here's what it looks like on a closed basis. You can't make this up. So clear-cut level, at this point on a again, the longer-term charts here on the weekly charts is basically the yearly opening range lows. So we're needing that break and push below 95.66 to get this going. Hey, Robert, great to see you. And if we do get that material break, the next level on the longer term prospects, again, this 94 region, 94.60s, you have the 52-week moving average, basic slope support off last year's low. It's pretty clear as far as the target to the downside. Look to the left on the crosshair there. You see some interesting inflection points, both as resistance, and as support on the downside. All at this level. So real nice inflection range right off the bat. Longer term picture. Okay, so just wanted to point this out. Daily chart for DXY. It looks like this. I noted this last night as well. We were basically testing the 618, of the advance off of last month's late low. So this near term advance off the January low was 96. We were heading instead into the open of Asia. Again, on a closed basis from a daily standpoint, we haven't done anything yet. So we're looking to see what happens here. I'll show you the near-term chart in a moment. It does look like we could see a little bit of a rebound, but the broader picture still looks pretty good for me. Once that 96.70 break, we got it. We sat there as resistance for a couple of days. Here's the move below the 100-day moving average. Again, next downside target on the near-term front, that 95.60, 95.50s. You're looking at the monthly open for February and the 200-day moving average. Okay, that level comes in right here, 95.63. Okay, so clear-cut levels. Clear-cut levels. Do we have the momentum to trade it? On a new position, I wouldn't jump in. If you're holding shorts on the dollar, anything northbound of 96.40s, I'd say, shave something off, definitely bring stops down to break even or better. Look for that last extension down towards 95.60s. If you're looking for fresh exposure, there might actually be an opportunity to short the dollar, to short euro or to short one of the other crosses for a dollar rebound. Ultimately, we'd still want to sell this rebound in DXY. Okay, here's DXY in the intraday. And this is what concerns me a little bit. So, these divergence points tend to be, for me at least, actionable. One reference point below 30. This one's technically is below 30 as well, but it's not the strongest signal per se. But the way price action has manifested itself, basically there's not much more room. Even if you drop into 95.80s, there's some slope there. You could find a little bit of a rebound for recovery. But at the end of the day, looking for a larger recovery to sell again. Okay. This slope series off last week's high looks decent. I took a parallel off that from the Friday high. Looks like it caught the highs for the week. Continues to highlight basically last week's low. Also converges on a 50% of the advance. That's like 96.27, 96.30. So that's going to be our near-term bullish or bearish rather inval. Keeping in mind that this looks to me, again, like an objective weekly opening range break that we just made yesterday. So all things held constant, 96.27, 96.30 near-term resistance. Okay. Now, you do have, just to bring this up real quick, that 786 retracement. The reason I took it off the chart is because we're highlighting that level anyway. It's 95.64 on a downside break. Just a basic pivot in price, real clean. That would be your next downside target if we do break to fresh lows. But Momo looks tired here. Momentum looks a little bit tired here, so I wouldn't be chasing any fresh exposure. So you can imagine with a look at the DXY like this, the euro is basically the inflection, right? The other side of it. The euro top side is our favored move on the longer term prospect. DXY downside on longer term prospect, but in the near term, getting a little stretched. Okay. Any questions on this? Cable on the docket, right? Robert, yes, of course. Yeah, I've been following that one real close. By the way, I love where we turned. Rob will hit that after the euro. I love where we turned because it's a really good spot. Really good spot. The slope was just insane. So I am expecting a little bit more of a pullback. Kind of does reinforce the idea of maybe some dollar, just a recovery of sorts before resumption. So we'll see if that pans out today. Here's what euro dollar looks like. And here is what we look like a couple of days ago. This was on the 25th. To start off the week, here's the slope that we were working with. Again, I tell you, I hate when I see these breaks of slope support and then you see something like this. It doesn't really give you much, conviction on it. Now, we did adjust the slope with the new update that we made, what we did yesterday in the webinar. In any event, here's the upslope that we're working with. We were looking for a break above 1375. We got that break. We turned just ahead of the 618, and look what it's doing right here. So again, it's the same thing that we're looking at with the DXY, guys. It's the scenario where, excuse me, if you're holding longs, I wouldn't necessarily bail on them, but I would be choking up to a break-even stop minimum, if not taking a little bit off, okay? The ultimate level that I did want to see on this particular stretch was 1407 to complete a basic 618. You remember that stretch low that we made, again, that was kind of an exhaustion, emotional stretch low. We don't want to get too, crazy with it, but even if that were to choke up, that would just move the 618 higher. So in my opinion, again, 1407 is a decent target. I hope we get it, say, in US trade. If we don't, a break below 1374, 1375 would, certainly risk a little bit more of a larger correction here. The ultimate move for the euro, or the big picture move for me, is still 1445. Here's the daily chart. Right, that's this region here. It's the 2019 open, so it's this year's open, but it's also a couple of different interesting technical aspects that you don't really note. The high day reversal close. It's a mouthful. For the last day on January here when we ripped into that fresh high, or not fresh high, but we made a test of the high. Funny thing is that advance reversed off of the previous January high day reversal close. That was 115. That's the high day close for the year. The high day close that we made for that last stretch is right here alongside the yearly open, 1445. Both major key levels on the upside for the euro. So this thing is nowhere near out of the woods yet, but we're coming into some pretty big targets. First thing is 1407. We're not too far off that. It's the 618. 1445 is the 2019 open. Late January high day reversal close, and then the high day close for the year at 114.99, basically the 115 handle. Okay, so that's this level. All major targets, okay? Major barriers, levels that we need to get through if in fact euro is making a large return. So things to be aware of if you're playing alongside the euro, really major. Even if break-even level is 113.77, Marco says, a 40-point long on that dollar short is so weak, says Robert. I think I see your questions out of order here, guys. Bear with me one sec. Marco, what do you mean even if the break-even level is 13.77? You're asking me, would you go break even on a 13.77 long if you're in it? Right? Yeah, I would. I would. I mean, here's the thing. Yeah, let me take a step back. Put it below the swing low, put it below the fib sequence, put it below these swing highs. Give yourself, a 7-8 pip, margin of error. As long as you're not loaded up on it, Marco. Maybe take three, a half, a quarter of the trade off at break even and leave that 3-5 pip stop, whatever, to see if you can maintain that low. But that's just my humble opinion. That's the major inflection. I don't like to get too granular, guys, with the to the pip right against that major level, because again, markets don't work in a vacuum. You don't want to get wicked out like something here or like something here, and then all of a sudden market runs in your direction. You're sitting there on your hands because you didn't want to lose that extra pip. Um, if every pip is that crucial to you, then you're just trading with too much leverage. Period. So in any event, Marco says clear, right on. Yeah. So watch for a hold there at 1375 for this to work, like I said yesterday. And then again, 1407, 1445, and 115, really major levels on the upside if we do get the continuation higher. And it looks like a decent, I don't like to use a Tuesday opening range break. Ideally, like the opening range is holding into Wednesday and it breaks then. But again, markets aren't always ideal. So on an objective break, you'd like to see 1375 hold as support. But with the divergence that you're getting here, so as opposed to, this is a good example, guys, also, as opposed to the DXY, which we were looking at the divergence happening, really down close to the 30 levels, right? Like down here, not the strongest signal. The euro, though, that's a pretty decent signal for a bearish trade. Momentum is not even able to make it into the 70 region. Really subtle lower high, really subtle higher high. In fact, is that a higher high? Let's just make sure. That's close. So you get the picture. So, I mean, it needs to either whip and run through 114 right here or look for the setback to find support somewhere in this range if this is going to hold. I'd love to see a 1445 tap. That's basically what our sort of ideal scenario is for. All right. Any questions on euro dollar? Don't forget tomorrow, well, we'll have a webinar tomorrow morning, but before the webinar, we do get into the German Consumer Price Index. We're expecting to see that rise to 1.5% from 1.4%. And again, it's going to be day 2 of the Vietnam Summit. Okay, we have that going on right now. Today's day 1. So we'll see if that offers any volatility for markets. And, oh, goodness, GDP. US GDP is on tap tomorrow. And that's going to be huge. This is the first read on fourth quarter GDP for the United States. We're expecting a clip of 2.5%. Previous one, if you remember, was a blowout read again at 3.4%. So it'd be interesting to see if we get any downward revisions to Q3 GDP. Certainly, it's a little bit delayed because of the government shutdown and the like. So this is our first sort of snapshot of how the U.S. economy did or performed in the latter part of 2018. All right, that is euro. Moving right along, that's number 2. Number 3, Kiwi. So recall that Kiwi dollar early in the week, we were looking at a downside pitchfork. This thing is wicked. I'm completely thrown off here, and I really don't know what to do. The only thing I could kind of note and at least be able to distinguish here is that you have a very clear weekly opening range, okay? So at the end of the day, if it fills the gap, which is sort of the likely scenario at this point that we've gotten this breakdown, the Friday uncovered gap is 68.43. That's where we closed on Friday. We gapped higher into the open. Just to fill that gap, you would require a move a little bit lower. You got 25 pip, 30 pip range lower. So here's, I mean, I guess just to show you real quick, here's what the picture looked like last night for Kiwi. Okay, weekly chart, really nothing to show here except the fact that we're in a major range. We have been. Kiwi, I think, above all else, since the start of the year, has given us the clearest and the cleanest yearly opening range. Here's your yearly open. Okay, yearly opening range just below Fibonacci resistance, just below that long dated 200-week moving average. And this is the whole universe for Kiwi dollar since the start of 2019 trade, 67 to 69.30. So the longer term picture, that's what we're focused on. Kiwi dollar on the daily chart looks like we're in some sort of near term consolidation. Okay. 69.30, that resistance range we just looked at on the weekly chart, that 50% retrace converges on basic slope. This is often the December high from last year, right? Monthly open is just below that, 69.15. So that's your major resistance, and that's the opening range high for the month and last month's opening range high. So, or last month's high, period. That's the breakout zone. Near-term support ahead of, the range lows for this month. You have this confluence of the 200 and 100-day moving averages. We've talked about that. That's just below the swing low that you made last week. That's somewhere in 67.50s. So, man, it's a range. There's not really much to do. We were kind of looking to play that range earlier, if you recall, with the previous update when we had that downslope. I'll show it to you here. Right, here's a previous update. We were working with this downslope right into the Sunday. And we said, look, if it's going to hold, this is resistance, right? It's 68.70. If we break through this, we're probably going to see that run into 68.94. Well, you popped right through it. You saw 69. Okay, so you definitely hit the 68.94 target. But here's the reversal. It's taking you right back into the weekly open, 68.61. So fast forward to last night's update, and we're like, look, it's a very clean weekly opening range. Look for the break. Even if it were to break to the upside, you still have to contend with 69.30, which is the range highs for the year and all the stuff we just highlighted on the daily chart. My humble opinion, again, at this point, is we do make a stab to cover the gap at least. That's 68.43. Look for a reaction there. If it spikes down into here in this hold, you see a strong reaction, probably going to see resumption because by my estimates, we're still in this near-term sort of upslope. If it gets any deeper than 68.40, I want no part of this. I think you probably see this thing just wash out again. Planning long entry at 68.48, 68.55. 68.55, Robert, for me, I wouldn't necessarily even try that. I would kind of just want to see if it gets into the uncovered gap. Even for me, a 10 pip range like that, I would wait it out. You know what I mean? And if we get a spike into here in a reaction, that's something different. That's something different. Now, again, on all the dollar crosses, guys, I do want to take a step back and really emphasize tomorrow's GDP print is significant. Okay. Listen, the Powell testimony, if you guys were listening yesterday, for the Humphrey Hawkins day one, today's day two, he really emphasized a couple of interesting facts about things that they're looking for. And if GDP figures come to the disappointment or even if they come stronger than expected, you could see a lot of volatility. So just make sure you're keeping that in mind, guys, that's probably the biggest event risk outside of whatever happens in Vietnam. For the dollar is what that print looks like tomorrow. It's really going to set the pace. So remember, expecting a 2.5 clip. Makes sense. Robert says okay. And the best way to kind of try to do these or try to play these to look for some slope, look for some structure to the downside, then look for that near-term structure to break. And that would give you basically the resumption trade. I was looking at this earlier. There's really nothing to work with just yet. So we shall see. Watch that. If we do break, watch this. Okay, that's number 3, Kiwi dollar. You are pretty clear for Kiwi data this week, so nothing on that side to really upset things. Just watch broader dollar performance. Sterling. Robert, this is for you, right? You're asking about cable. Man, again, beautiful turn, okay? 33 was the level, aside from it being a big figure. Yeah, cool, all that good stuff. It was December low, clear pivot in price if you look to the left, and basically basic slope resistance, this whole parallel series. Remember, we were working with a sharper one last week. After that Friday low, we kind of adjusted the new slope. It started to work out pretty well. You had a bisector line here, was support, resistance, break, acceleration, support, resistance, resistance, break, acceleration. Kept the focus higher above 31.81, but we're looking for 33 to look for reaction. If we break through, right, what we always say, a breach of upslope resistance, typically the sharpest part of the rally. If not, you don't want to see any dilly-dallying over here. You don't want to see price sit here and kind of hug this line. No, if it's going to reject it, we want to see it rejected. I think at this point, it's a near-term rejection. So you think at this point, you kind of want to like not chase the long side beyond this. Here's the push through, and here's the hold, right? If it's going to open the U.S. trade session and rock it through, we kind of need to see this thing continue and accelerate. If we sit here as is into the U.S. trade session, we hold those highs, I think that would be a rejection trade. You're already an overbought. You don't want to initiate a new long. And you look for the near-term exhaustion. Again, it's a bullish trade. We look for that near-term exhaustion to get long again. If you're holding longs, anything south of 32.30, okay, so this low, I would have a break-even stop. If you want to play more conservative, put a stop against this low. If you're long from anything above this low, definitely at this point take a portion off and go break even or better. Because if it does pull back, I would expect that we could come all the way back to the parallel, and that would take you just below that low. And I don't want to see you eat that loss just because you're trading against the swing low. So keep that in mind. It's been, a pretty decent breakout, guys. Another reason why I'm looking for slope resistance there is right here on the daily chart. And again, another thing that you remember, the daily charts, guys, are always one click away. So if you click to the previous chart there on Sterling, it will come up, and here's the previous daily chart. And what's the level that we had highlighted as the next key level above 31.81 was right here at 33. Again, that December low and that parallel. This is just a slope of the same exact pitchfork, right? So it's a daily chart, intraday. Don't watch this wick. What matters to us is what the daily close does. Northbound of 33, I think we're all right. I mean, I wouldn't initiate a new long, but I think it would rip, okay? If we close below 33, man, that screams exhaustion. That screams exhaustion. So in that case, if you're a little bit more of an aggressive trader, you can try to tempt the shorts a little bit against the high. Don't get too crazy radical with it. But this would be the area. If it's going to happen, this would be the area of which you'd start to see the long side get a little tired. Okay. Love the Sterling trade. Always have since the start of the year, guys. You know how it was just one of the trades that you didn't really want to talk too much about because a lot of people, this whole Brexit headline has people's heads spinning. But from a technical standpoint, you judge it. Here's the weekly chart of Sterling. right? You judge it. Look what we did at a Fibonacci ratio at the low we close. This is the post-Brexit low we close. Just man, it's there was nothing to really be super bearish about aside from the headlines, which is what our job is, guys. Our job is not to give you guys the story that's going to get the clickbait and all the hot popular headlines. It's what price action's saying, man. There's this thing came in at support, ripped. Um, you know, it's a great trade. At the end of the day, you're at resistance here. Anything you take on Sterling, as always, because of the headline risk, you want to make sure that you're reducing your leverage size. Again, my humble opinion is from these levels, watch for some sort of near-term correction. Look for support along that parallel, ideal scenario. Okay, this is going to move in time. Bullish invalidation, I still have that monthly open at 31. I know that doesn't help with a 200 pip away, but hey, it's pound. Man, when this thing makes a stretch, it makes a stretch. Keep in mind at this point, we're talking about a rally of like 4.4%, in less than 2 weeks. Not bad. Any questions on Sterling? Bear with me one sec. Pay no attention to this. I just want to see what this looks like. Okay. Robert says, totally amazing. Cheers, Robert. Marco says, but the headlines will whipsaw you. Absolutely. Yeah, setting stops is very difficult. Robert, or Marco, don't get me wrong, man. I'm not advocating for everyone to get involved with this trade. It's definitely not for the faint of heart. But the longer term levels on the daily chart at least have been super clear. And it's one of those trades where if you're going to get involved, guys, minimal risk, right? So your leverage is much smaller. And yeah, Marco's absolutely right. You got to open up your stops. You can't get into a Sterling trade with a 15, 20 pip stop and hope it works. You're going to get stopped out every single day. It's going to suck. But if you're willing to open it up a little bit, trade down your leverage size to an amount that you're comfortable with sitting in, it's really hasn't been all that. It hasn't been all that bad. Marco, I'm not telling you that I'm sitting here with a long position. That's what I did. But looking at this from a technical standpoint, we've been so constructive for so long. It's if you continue to listen to the noise, it's kind of one of the reasons you may have missed out on this rally. Robert says, if there is time, can we look at Sterling Oz and what we can think for the rest of the year? If we close at 187, go flat for a bit, or even pull back, this thing could really move. Sterling Oz, Rob? Sterling Oz. Yeah, we'll take a look. I don't think I've updated that daily chart that I lost yet, but we'll take a look. So any questions here on Sterling? Okay, basically, don't chase this, guys. We've been bullish. It's been a great trade. I am still bullish on the long term, but man, right here, let's just say if Sterling's gonna pull back, this would be the level. Okay, this would be the level. So my near-term focus is sort of for possible exhaustion here, pull back towards that parallel. If we break this parallel, then you take a retracement and start to work the downside targets. For me, I'm not even going to do that right now. My first and primary focus is, do we get some sort of near-term exhaustion right here? Okay? Sort of the immediate threat is for that pull back lower in Sterling. All right. You know what? Let me take a look at that Sterling Osborne now. You got me all all me interested in it. Let me take a look at Sterling now. Well, let me do this. I'm gonna keep moving around. Let me go over Aussie, and then we'll hit Sterling Aussie. So here's Aussie. Haven't updated it for you yet on the intraday charts recently, but what I wanted to show you guys is kind of keeping things as objective as we can and not letting the noise filter in. Here's the daily chart that we've been following. Where was the last Aussie update? It's right here. Let me get the last daily chart. Guys, this was published on the 20th. Okay, this was 7 days ago, over a week ago. We highlighted 72, 71, 75, major key resistance zone. Can't do anything on the long side to really convince us that the low is in until we break that high. And then we failed, right? We posted a massive outside day reversal right off that level. That turned us kind of bearish. That's a bearish development. And the fact that it happened at resistance, boy, that was for me, pretty telling. Now, there was a complete fake out because that low that was registered still remains the low. We rallied right off that low, and look where we're turning today. All things held constant. If we break and push below essentially like 71.45, guys, that would constitute another outside day reversal off of this same resistance range. So, man, I mean, sometimes you can't make this stuff up. Like, you can't. Let's just say this: our bullish call that Aussie is kind of made a larger reversal here. It all hinges on that one level that we've been unable to make it through. So at this point, you got to soften that expectation. We could be completely wrong. Here's Aussie on the weekly charts. Just wanted to show you it's basically in the same zone. Little bit of a longer, massive wick here into the open, obviously, but it's sort of the same thing that we're talking about with Kiwi dollar, in that the monthly and yearly opening ranges for January heading to February are essentially still intact. You're looking for that break. Until we get that break, it's a range. Sucks, but it's range. So we're coming off of near-term range resistance. The intraday chart looks like this. It's really messy. I didn't even want to show this to you today, but since we're going to cover Sterling Oz, I guess we'll go back to it. The only thing I wanted to highlight is, remember this line? 75% line. We highlighted that pitchfork support. We were talking about that line. The reason to look for the 75% line on the opposite side is for that parallel, that symmetry in price. We came there exactly where we were capped out last week. Got a little bit higher this week, but again, puking out right at that slope. So look, this near-term upslope has been a mess. We broke on the downside. We pivoted back above. It looks like we're testing it now. Again, this thing is just, it's ugly. If we break the weekly open support, look lower. Look lower. Don't have anything on Aussie, but that's kind of my problem with Sterling Oz, right? So Sterling coming into resistance could pull back. Aussie, if Aussie's going to rally, well, that could give Sterling, or Aussie's going to decline. That could give Sterling Aussie some more sideways movement. Let's see what that looks like. Here's a breakout that you're talking about. Let's go to the daily chart. Oh, this hasn't been updated, right? Okay. Let's put it together now, right? Shall we? We have time? What time is it? 9:04? Let's see what we can do. Boom, boom. Okay, now checking the high day close from last year. Interesting. We're making it through that. It's your February open. That's your yearly open. Robert says check the weekly. Huh? Check the weekly. Okay. I probably do have something saved on the weekly. Let me look. Pound Oz. Ah, ha ha. Woo, big level. Big level. Well, that was a good suggestion, Rob. I didn't even know I had this chart put together. It must have been a while since I looked at it. Obviously, it's not since the start of the year. Here's pound Oz actually coming into a big level as well. So this actually mimics and gives us further conviction. Thanks for bringing this up to what we're looking at in pound, right? We like the long side of pound, but right here, it could get a little bit of a pullback. Don't get too over aggressive. Same thing here on pound Oz. I think that you inevitably do get the breach of this level, but boy, this is a whopper of a level. 86.88 into 87.20, that 40 pip range, 30 pip range. Keep a close eye on it. That's my favorite Fibonacci confluence regions, the 618 retracement from the decline, a 100% extension from the ascent off the low. It's not the broader extension. Nonetheless, that level converges on the slope we've been following essentially since the 2016-2017 lows. That pitchfork, the parallel of that pitchfork, caught the highs in 2018. Even though we broke below it twice, both breaks were pivots, accelerations, then were tested as support. Break, acceleration, tested as resistance. We're right there again. It's pretty big. It's pretty big. Momentum coming right into 60. Wow. Wow. Yeah, I would not be chasing this on the long side. I would not be taking fresh long exposure. If I'm holding long exposure, I'd be definitely wrapping up a piece of that position as we get towards 87. Okay. If we do break through it, how can we play it? So Robert, on a play like this, the break wouldn't be the initiation of the trade. It's always a fool's errand to try to pre-play the break unless you have a good position for entry, which you don't. Okay, which you don't. So the way that you would play this on the break is that you would wait for the break. You'd want to see a weekly close. I mean, based on this analysis that we're looking at on the daily chart. I'm going to take you into the intraday in a moment and show you how we'd actually address it. But if we're looking at this kind of chart, it would require and necessitate a close above. And then on a pullback next week, you'd want to see support. You'd want to see exhaustion into this region. And that's where your entry would be for the next move higher. If it intra-week spikes and then we close the week below, that's going to be an exhaustion trade like this, in my humble opinion. That's going to be an exhaustion trade like this. Look how we tried to break through that moving average. Plowed through it intra-week, closed lower. Plowed through it intra-week, closed lower. Plowed through it intra-week, closed lower, until finally it gave way to the decline. So on a move like this, we need to close the week above for this chart, at least on the weekly basis, to suggest that we've made the break back above. Okay, so that's just a word of caution. On the daily chart, man, I wish I had this kind of drawn out here. What is that 618? Right, okay. And this is a real long dating pitchfork, but kind of goes to show you. Okay, so on an intra-week basis, Rob, right? If we're trading this and we're not looking at the weekly chart to base our position, we're just looking at that for reference. And intra-week, it plows through this same exact way I just told you on the weekly chart, same exact thing you do on the daily chart. If we close a day above this, you look for pullbacks to find some support at this region. If the pullback sails right through, you sit on your hands and do nothing. If the pullback finds some support here and starts to rally, that's your entry against that low. And you look for the stretch near 190.80. That's the daily chart type of analysis. This trade, guys, also an objective look at this looks like we've made a pretty decent break of the weekly opening, monthly opening range. Here's your February open. You set a low, you set a high, you try to test the low, you can't even make it that deep. You break through the highs, it's a little contentious, but here's the resumption. That keeps the focus basically higher above 183.45 into the close of the month. So you're looking for a late February high. It's the 27th, guys. What, one day left on the month? Watch 87.19, 86.88. Let's get rid of this. Rob, does that help? on pound Aussie. Little impromptu setup there for you. It's number 5 on the session. He says 100%. Thank you. Cheers, sir. My pleasure. So dollar CAD moving right along. Looks like the Pooja says looks like a rising wedge to me on pound Oz. On what time frame, Pooja? On the daily chart? It depends on the reference points you're using. Okay. So she's saying the lower parallel of the pitchfork and the red trend line that you're trading off of. So I see what you're saying. You're looking at this. That could be the play, but guess what, Pooja? That adds even more the emphasis on this region. And if this pops, you'd expect real fast acceleration. Sure, could be. And again, that's why we leave these pitchforks on, guys, even when they're violated, because they do offer reference a lot of time to major key pivots in price. Okay, so moving along, dollar CAD. Here's what the loonie looks like. Here's what it looked like last night. Nope, that's not last night. Here we go. So I hope you got picked up the picture here. You had conflicting signals in dollar CAD because you made a pretty big reversal off of big support, off of big support rather. The rebound came higher, and then right ahead of resistance, yesterday's close, man, was messy, and that looked pretty darn bearish. So look, on whole, this thing is in it's a larger weekly opening range, but it's pretty clear at this point, the weekly opening range. You're looking for the break. It's not the cleanest thing, but this is the major support that you're trading, and we're there again. Monthly open, objective stuff, guys. Has nothing to do with my opinion. It is where we open the month, and as long as we sit above that, it's 131.23. You don't want to get too aggressive on it. Ideal scenario, like I said yesterday, is that this thing rips, fails ahead of this parallel, and then breaks down. That's like your ideal scenario. I mean, markets don't always work in ideal scenario ways. Here it is now. You didn't get the rally, but here's the move lower and test. So you're testing monthly open support now. Just lower, literally like 10 pips, is the actual weekly opening range lows. And that's the break that would just be an objective short trigger, right? And you'd be looking for a drop towards 30.50, 30.67. This region is everything to us. We've talked about that region at length. Here's the weekly chart highlighting the 52-week moving averages, the 200-week moving averages, and the 38.2 retracement of the advance from the 2017 lows. All of that converges right here, basically between 30.70 and 30.50. So that was the objective target in late January on the downside move. We turned just ahead of it. That's still the major objective zone on this drop here. Okay, so kind of panning out. Look at this break and push below the weekly close, but 30.67, 30.52, man, that is so important of a zone for us. I really hope we get that move lower. But now at 131.25, are you bullish, or is it better to hold at 31.23 right here? No, I'm not bullish. I mean, here's the thing, Marco, if you're looking for a near term, if you're not holding anything right now heading to the US trade session, if you get some divergence, you get something on the near term that shows you, a trigger to the upside, sure, your stop would be on the long side, your stop would be against this low, but you'd only be looking to play a near term recovery literally towards 31.50s or so. Why I wouldn't take that trade is because you just made an outside reversal candle on this hourly chart off that pivot zone, which is former swing lows, break saw acceleration, turned ahead of it as support, break saw acceleration. We just got rejected again. So, I'm not really inclined to try to play that per se. It might work, don't get me wrong, but just my humble opinion. Um, yeah, I mean, I want to see that move towards 3067, 3050. It's such a huge zone. And I was so teed off when we came here, we turned just ahead of it. Um, it'd be finally great to kind of get that move lower finally into that key weekly zone support. Let's take a closer look at this. This is the 30-minute chart. Okay, so that would be sort of the scenario if we break down further in dollar CAD. This 3-point touch structure here, so you have 1 point, 2 point, 3 points of reference adds, and not validity, but further highlights, let's call it that. The 200-day moving average, let's make sure that's in the right spot here. 3152, 3151.8. Yeah. So just a quick look at dollar CAD, Marco. Hope that helps. So if you're one of those, if you're of the mindset that, man, you said this is in a range, we're heading towards the weekly opening range lows. This might be a decent place to play the rebound. This is sort of the breakout point, right? You have an outside reversal candle right off that level, back into monthly open support. So you're at support. I'm not going to sell here, but with the same respect, we're still in the downtrend. So it would be sort of a reversal break above this pullback. Stop would be against that low. You look to play the recovery higher. Um, or if you don't get the recovery and it kind of just breaks this low, you don't really get the opportunity to get back in. And you're looking for that downside move, A, towards channel support, B, towards that 30, 60, 30, 50 level. So critical on the weekly chart. So critical. All right. Questions on dollar CAD. It's number 6. All right. Commodities. Number 7, gold. Number 8 will be crude, and then we'll hit SPOOs real quick, the SPX. Here's what gold looks like. So, it's been super boring. I wanted to highlight this range for you last night because I do think that you'll get a decent play off this once we finally clear this consolidation. Might be looking for a move on that earlier in the U.S. trade session today. Basically, these triangle formations, guys, they could go both ways. A lot of times they're supposed to be resumptive patterns, but I've seen them be terminal. Look, at the end of the day, if we get the downside break, you still have to contend with 1320. That's the level that we've been talking about for the last 2 weeks. Okay, 1320, 1319. That's sort of support. It's exactly the opening or the range lows for last week. If we do break this consolidation, look for a break there to open up a larger setback. And the targets that we talked about last week are the same targets that we're still looking about: 1311, 1303, 1302. Those are sort of the levels we want to look for a support on a move lower here in gold. The broader picture is still constructive, right? Nothing's really changing from there, but certainly where we turned from, how we turned there, and the resultant, price action. Certainly, if we break 1320, which is also the monthly open, the 786 retracement of the decline from last year's highs, right? Last week's lows, all that lines up right here at 1320. So while we're in a near-term consolidation, even if that breaks, we have to see a daily close below 1320, and that would suggest, okay, you got a decent correction on hand. You look for a move just into basic upslope support, that leaves room as deep as 1302. Now, I don't necessarily think you get all the way down to 1302, but certainly that's the risk below 1320. And again, the intraday chart kind of highlights you could find some support around 1311, 1312, that 50% decent pivot in price there. But really, this is like your major key support. So for gold, it's it's a little bit boring if you're holding longer term positioning from anything sub 13. I don't really think there's anything that could be too concerned about here. If you're looking for fresh exposure, you have to look for that reaction at 1320. The bigger risk is the move below 1320 to give you a larger setback. If 1320 holds, you're still in the broader upslope. Now, this is one pujo. You notice, or you mentioned earlier, rising wedge pattern, rising triangle pattern, whatever. It could be either or. Here's one where it's same sort of scenario, right? The parallel of support extending off the highs that we made here in early January. Well, that caught the highs here and pretty much caught the highs here. And near-term slope from right here is a different, gradient. This is not the same gradient. So consolidation, it's a pretty subtle one, but possible, and further adds evidence or further adds significance to a possible break below 1320. Questions on crude, or excuse me, questions on gold. All right, number 8, we'll hit crude real quick. I don't see Pete in the room today, and he's usually looking at the SPX. I'll hit the SPX afterwards if he sees the archive of this, but very interesting price action and continuing to push nicely off that resistance level. First things first, here's crude oil. Look, we're at slope resistance right here and right now. This is the same level that we've been following on the intraday charts. Here's the crude chart from a couple of days ago. We were heading into that 33 or that 38.2 retracement at 55.30. Look, this is a big level. The reaction here was, what's the word? Not stellar, but just to show you on the bigger picture, that was a big level. 55.30, 55.55. Here's the weekly chart on crude. Okay, 55.53 or whatever. That was the 38.2 retracement of the entire decline from last year's high. 55.20 was the opening range highs for 2017. Pivot break in late 2017. Accelerated break in 2018. Resistance in 2019. Support this week. Okay, that's the support level. If this gives out, I do think there's a bigger washout in crude. At the end of the day, looking at this from the weekly chart, we've simply come into resistance and kind of whipsawed back a little bit. If this holds, then we look higher. We're working under the assumption that this was a big low that we made late last year. Okay, I like crude higher on the longer term, but we are now checking initial downslope resistance. So the immediate focus for me is right here. If the top side breaches, you guys know, me and Jamie have both been harping the same song. An inverse head and shoulders essentially has a measured move to 63. Okay, just ahead of that, you have the 50, what is this, the 200-week moving average. 52-week moving average, just lower, at 63, 63.60. So this is sort of the bigger measured move complex with that head and shoulders break. But first thing for me is 60, 59, 60, 60, huge region. You guys know I've been talking about this for a while. First things first, you're now checking downslope resistance. So that's the weekly chart. Daily chart looks like this. Oops. Again, highlighting where we are now. Sorry to keep pushing you on your bias, but levels are always clear. Biases are a bit more thornier. And that's why I always tell you, Marco, having an opinion on the bias is only 50% of the game. It's having the setup. So my broader bias, Marco, is bullish on the picture for crude. But that broader bias is heading into its first inflection point. And as I noted, as I've been noting to you guys, that's 58.10. Okay? It's the low that we made for February of last year, and I said this in the webinar yesterday too. Really nice symmetry, both in price and time, right? Here's the February highs, and that converges on the upslope. We turned just ahead of it, So for me, the focus is right here. If we break below 55, 54.80 is the reversal high day close that we made in early February. It's also really close to that support confluence of upslope support and downslope support. If we get below there, that's the the level I told you that we see a bigger correction. But for now, the focus is on this region right here. A pistol to my head, I think that this thing corrects lower before a resumption. Okay, I do like the upslope broadly speaking, but it's the threat for a bigger correction lower remains below 57.14. That's the high day close for the year. Okay, here's the intraday chart, guys. There's 57.14, high day close. This is what I told you in the report is our near-term bearish inval. If we get through this, you have to look for resumption. Okay, we are bullish broadly speaking, but while below this, the risk is still for a deeper cut. So here we are. Price is at resistance. If it's gonna move lower, you want to see failure ahead of this level in today's US trade session. Hey, wouldn't you know it? It's the 618 retracement too. 56.72. Damn. That's sweet. I want to see a hold right there if this is going to work. Okay. Remember, Marco, we're working under the assumption that this whole pullback, this whole breakdown is just simply a correction within the broader uptrend. So even like a 3-wave, 2 equal legs down would still get you for that move closer to 54. Okay. Again, we have no way. This is, guys, complete speculation. I have no way of knowing this is a high. But for argument's sake, look where the 100 comes in. Right? So if this is going to work, guys, basically, long story short, we need to see exhaustion right here ahead of 57.14 in today's US trade session. He says, I wasn't necessarily referring to the oil. I'm just talking about general comment. I got you, Marco. I got you. And no, there's no worries to keep pushing by. Ask me all you want, man. You're in the right spot. I'm always going to give you my honest opinion. I promise that. He says, thanks. You're more than welcome, sir. My pleasure. Questions on crude? All right. Last but not least, number 9. Here is SPX. I'm in amazement every time I look at this chart because we were talking about this, and Peter in the webinar, I don't see him here today, but always brings this up. And man, 28.10, you guys remember the level? The 786 retracement of the entire decline off last year's high there. You had slope resistance. This is a basic channel, right? Here's the reaction that we got off it. Here's the move lower. 2 equal legs off that high, even if this is corrective, which is what you always want to make kind of the primary assumption before, takes into 27.73. So I still think there's room to the downside while below the weekly open. So weekly open resistance at 27.91. Next downside target, I would watch 27.78 at this point. Earlier in this week, guys, I had it like this because it converged on this basic slope. Now that we've invalidated that slope, that level, I want to just highlight as sort of a soft target. The bigger region for me now is 27.78. So soft target here, 27.70 or 27.73, excuse me. Soft target 27.78, bigger level is 27.73. If that breaks, man, there's room for a bigger drop here for sure. This is all contingent that we hold sub 27.91. If we get through the weekly open resistance, I want no part of this. This probably chops sideways for another couple of days. But if it's going to work, 27.91, 27.92 needs to hold the resistance. And again, that's your weekly open. Questions or comments on the S&P 500 heading into the close of our webinar here today? Okay, so stay tuned. Don't forget, Jamie will be up at just a little over 2 hours here for the weekly strategy webinar. I'll be back on again tomorrow. Guys, thanks for accommodating. I had to switch the webinar again this week from yesterday to today, but we'll pick things up again tomorrow, same time, same place. Till then, best of luck trading, guys. Cheers. Watch for those headlines from Vietnam and US GDPs on tap tomorrow. We'll go over that live here in the room. Hey, Robert, Marco, you're more than welcome, guys. Cheers. See you tomorrow.